All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Glad to be with you. Hopefully you're glad to be with us. Just took the baton from Mr. Tony St. James. Let's see how these markets are shaping up here after doing the radio show. It was okay. Let's see if we've been able to stay in the okay range, but we're up 3 ticks right now in December corn. 421.5 is last. 2 cents off the high of the day, a penny and a half off the low. You know what? We're doing nothing. 421.5 is the price in D's. March, the price is 438.75. We're up a half cent, folks. Not a lot going on in corn. I don't want to cloud your mind with a bunch of numbers for no good reason. We have a little bit of a rally going on in beans. 5.5 cents better in the Nove to 1021.75. I just don't like how low we got overnight to that $10 line. 1011.5 is the low. So we're a whole dime off the low. And we're about, what, 7.25 cents or 6.25 cents off the highs. That's what's going on in beans. We're up about a nickel. There you go. Moving over to the wheat, what's going on with Chicago wheat? We can look at that and say that we're 3 cents higher in D's to 597.75, which is in the middle of the range. We have a 10-cent range. We're about 3.5 cents off the low. Now we're about almost 4 cents off the low of the 10-cent range. So that'll give you an idea where we sit in that range. March is up 2.75 cents to 621. That's March wheat in Chicago, right? 621's last. How about the hard red in Kansas City? That's up about 3.5 cents across the board. D's is up 3.75 cents to 607.5. And that's about a 13-cent range, and we're right smack in the middle of that. March is up 3.5 cents to 623.75. That's the hard red in Kansas City. Let's go to the spring wheat in Minneapolis. We're a penny better. 646 even is last, and that's about 4 cents off the low of the day. Not a lot going on there. March is actually sharply unchanged at 666.25. All right, that's what's going on in Arizona, Minneapolis. I got Arizona on the brain. Let's take a look at cotton, and we'll get to our guest analyst. 33 points better there in the D's. 72.60s last, 30 points off the high of the day, 59 points off the low. All right, let's bring him in. That's Mr. Scott Wilson. He's with CHS, and he's in Bloomington, Illinois. He's not up at the home office. They've given him his own big building to live in. Scott, thanks for being on. What do you got for us today? Good morning.
Yeah, morning. We saw a lot of strength, actually, at the end of last week with everything going on in the Middle East. Things have kind of calmed down this week. We saw a pretty big drop yesterday in crude and prices both, just with no more escalation going on over there. So the longer it takes for Israel to retaliate, if they do, I think we're going to see some more geopolitical risk premium come out of the market here. So we did get a little bit of strength today. With the EIA data that came out, we saw a build in crude, and then we saw a draw in both products. And we actually saw demand for diesel and for products for gasoline to both increase significantly this past week as well. So we saw some strength after that today.
Yeah, I mean, they are going to retaliate. I mean, I guess it's just how.
Mm-hmm.
What are your thoughts? I mean, You know what? There would have been a time and a day that with this all the strife in the Middle East, we would have seen these energy prices really take off a lot more than they are. I actually feel like I feel like just my gut instinct, having done it for 37 years, I feel like we're kind of muted. What do you think?
Yeah, no, I agree. And I feel like you said, you pegged it perfectly. If they do retaliate and it just ends up being a fireworks show and they don't go after any energy infrastructure, I mean, you might get a little knee-jerk reaction initially, where if they do attack some infrastructure, go after some of that in Iran, then you could definitely see some premium in the market and prices for crude rise above that $80 level. But if you look at what's going on, I mean, we've kind of shifted back to that demand picture. If you look at the U.S., if you look at China, and you look at India, they make about 38% of the oil consumption globally. And so all three of them are underperforming with demand. So that's where traders are going to focus back on if there's no geopolitical risk out there. And I think you're going to continue to see prices fall unless like we said, Israel does retaliate and goes after some of that energy infrastructure.
And then we've got obviously CPI and PPI at the end of this week. I mean, crude oil prices have traditionally been, played a role in that CPI number. And do you think anything could come of that, could shake up that market? I mean, look, if they start to pull back the reins on these rate cuts, what do you think happens to some of these commodity prices?
Yeah, no, I agree. Yeah, I think about a week or so ago, we had about a 50-50 cut for the upcoming November Fed meeting. And now we're kind of leaning toward that 25 basis point cut. Jobs data has come out very good. And that's one of the main sticking points that the Fed has continued to worry about cutting rates was that jobs data. So I do believe we're kind of just blow sideways here, like you said, in regards to that with what the Fed does. So yeah, I'm looking for a 25-point cut at the meeting in November, and I think everybody's kind of expecting that. So I don't anticipate a large move for the market with commodities with that 25-point cut. If we deviate from that, maybe we see some more action there.
All right, brother. Great stuff. Thank you very much. Scott Wilson, he's with
Thanks,
CHS
man.
in Bloomington, Illinois. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with a guy in a cow jacket right after this.